welcome to the VSA Capital Tech and Transition Energy Podcast. It's Thursday, the 4th of June. And Phil is actually at home because he's got shingles, I think. Have you, Phil?
I have, but fortunately, I've taken a lot of painkillers, Andrew, so I'm very happy to be on the podcast.
Painkillers for the podcast or for the shingles?
Good point, well made. I think it's the shingles.
Yeah. Oh, well, we all hope you get better, and just as well you're not close to me. Although I think once you're over 65 or something, you can get a jab against shingles or something. I don't know. I need to look into these things, sadly, seeing as how I'm about to become that fairly soon. Anyway, we'll skip right over that. Look, there's a few things just on sort of. There are a few things that are quite important this week, but a little bit of what I've been looking at this week actually is the rise of valuations in the States, still going high. Two caught my eye. First one is ARM. Which, if it was in the FTSE, would be our largest FTSE client. What a shame it's not. And what a miss for the UK government and the London Stock Exchange that it isn't. It's been phenomenal. It's just huge now. It is, of course, still a British company. Just happens to be listed on NASDAQ. But we don't hear a lot about it. It's our biggest company, I think. Don't hear a lot.
Yeah, it's $400 billion market cap now. It IPO'd in 2023 at 60 billion valuation, and it's now worth 430 billion.
I was going to ask you a much better question than that, and that's what it originally IPO'd for, Phil. Take my word, it was a lot less than that, and of course it was spun out of the computer company.
Acorn
Computers. So and at one stage they were valuing it at a few million. It's an extraordinary story that just has not really caught the attention enough, should we say, of people that this was a massive British success.
Yes.
People really should sit up and notice. We're really good in the UK at inventing things, getting things going, but we just don't have the support, the entrepreneurialism, the capital, the right mindset to take these things through to become true unicorns. It's so disappointing, but there you go. But, of course, what we've seen also this week in the States is sort of initial valuations for the IPO of SpaceX coming in at $1.8 trillion. It's extraordinary.
Do you know multiple? I was reading CNBC quoted the head of markets at AJ Bell, Dan Coatsworth, and he said it puts it on 67 times sales as a multiple. Blimey.
67 times sales.
Right.
Can I do that with VSA, please?
Yeah, exactly. Good. Yeah.
That would be good, wouldn't it?
There's Anthropic as well.
Well, that's the point. I mean, actually, just going back though to SpaceX. This is one point here, isn't it? Because it isn't just SpaceX. SpaceX does also own XAI, and it also owns Starlink.
Yes, yes.
You do just have to bear that in mind as well. It's not all about space, the final frontier, and Captain James T. Kirk.
It's not. No, live long and prosper. No, it's not. But Anthropic also potentially going public as well in the US. And I was just reading about Anthropic. When I used Claude and Anthropic, founded 5 years ago, recently raised 65 billion and valued potentially the Series 8 round valued at 965 billion. But what was amazing reading about this again from CNBC, so the revenue increased from $1 billion ARR, annualized recurring revenue, in early 2025 to 47 billion ARR now on Claude. What?
That is pretty amazing, isn't it? Where did I go wrong?
Silly, isn't it?
It is all pretty bloody amazing. It really is. Anyway, I suppose that what it does just question yet again is there a bit of a replication here of what we saw in 1999?
Yes.
And actually, I do remember back in 1999 telling somebody that ARM was only on a P of 500, so it was cheap. I was wrong. It was then the dot-com crash. It was actually quite expensive. But of course, it then went on to be worth more. And I suppose that's what people would say now. Yeah, we could be in a bit of a bubble. And yes, maybe these things are coming at too high a price, and maybe ETFs are distorting the price. But of course, longer term, in 20 years' time, maybe it's cheap. It all depends what your time frame is.
Yeah, it does, doesn't it? But Andrew, I was just going to say one. I don't know if you saw this in the UK or not, but Oxford Quantum Circuits, developing quantum computers, they raised £260 million this week in a Series C investment.
Private money. That's the trouble.
I know it's private money, but it shows that getting back to what you were saying about UK innovating, but this is real, proper scale-up capital there, on which is what the UK desperately needs, is this, real scale-up capital.
Well, on a point like that, I mean, as most people know, we do a lot of work in the battery space, and a lot of the battery space is private, and we're doing one at the moment with a company called Super Dielectrics that is very interesting for very short-term cycle battery storage and data centers. But one we looked at a few years back, and had a lot of conversations with the company, was Nirebolt. And Nirebolt just did a raise at $1 billion valuation, which we found pretty surprising, didn't we? But it just shows we do have these skill sets, and we can do it, and the valuations can be got there. It's really all about finding the people who will put those sorts of money in around the world. And it's around the world. I mean, that's why we travel so much. I travel quite a lot. I think you travel from Cambridge to London. That's about it. I do travel around the world looking for these people. And actually have been remarkably successful considering. But anyway, there we go. It's valuations that are getting high. Combine that with the fact that there is just too much debt in the system. Or certainly there is just too much debt in the system, full stop. That is why people are concerned that the markets could be vulnerable. But who knows? We'll see. When you think the markets are looking very vulnerable, it normally takes a little bit longer until they crash than you expect. But when they crash, they normally go down far more than you expect as well. I'm not saying it's going to happen, but just be a little bit cautious.
Yeah.
Anyway, there's my advice to you, Phil. You're investing your multi-millions from all those investments you've made.
Thank you for your wise words, and I look forward to you renaming us VSAI.
Yeah. Right, let's start off in the results sort of column, so to speak. Two of our clients have kindly reported figures in the same week. So we've got two roadshows we're running at the same time, just to make our life nice and easy.
Yeah, exactly.
They're two of our favourites, of course, and they're ones we really do get right behind because we have a huge amount of time for both. So it's obviously Aurrigo and Invinity Energy Systems. But Phil, why don't you pick which one you want to do first? I'm sure I'll interrupt you and cut over you because I have very strong views on both these companies as well. But I'll let you kick off, Phil.
Yes, we do. Well, why don't we? I'll go with Aurrigo actually this morning. So this is they've got autonomous vehicle technology. So it's software, vehicles themselves, all the camera systems and lidar systems, and this is for targeting airports initially. So essentially robots that will bring baggage and cargo from aircraft, but targeting international airports. And what's fascinating about this company, I find, is they have their annual results, and they reported revenue of £8 million. So seemingly small revenue for the autonomous business. It was £2.6 million. But it's the progress they made. They burnt through £6 million of cash. On that £6 million of cash, if you look at what they actually did in terms of delivering technologies, securing international airport partnerships, signing up a strategic agreement with Swissport, who operate at 270 airports internationally, it's making terrific progress on a very small amount of capital, taking this business international. And I think that is very exciting.
Yeah, I think actually to say they burnt through is wrong. They're actually very, very careful with their cash, and they've done it all with frankly, very limited cash. When you look at what these American companies get given, they get given hundreds of
Yeah,
millions.
exactly. Yeah.
They've invested it very wisely.
Yep.
So I
Correctly.
think that's the difference. They've been very smart, and of course, they do have this really interesting setup where they have their long-standing automotive division, which they've had for years, which generates profits which they reinvest into the automation, airside automation, but also the technology that they have there and the brain power they reinvest into airside automation. So actually, burn is completely the wrong one. They are very
Oh, I've
capable company.
utilised them. Yeah,
They're
utilised
they're
them.
progressing really fast. Now it's interesting. I did go on the one of the group calls this morning and listened in, and obviously listened to. It's always interesting to hear what the questions the investors are saying, and I think that there's a few points that come up with this, and that is one is if this company was in America, it'd probably be worth about $1 billion. Call that 700 million sterling. It's worth 70 million sterling today or something. I mean, that's the difference there. But people are they're like, when are we going to get the big news on airside automation? I suppose they're almost angry. When's it coming? You've said it's going to come. When's it coming? It is coming. Airside automation is really complex. There's a lot of regulation. It's the obvious place for automation because everything is, where everything is and everything moves very slowly. But it's full of regulation and it's full of very nervous airlines who have very expensive planes who go, just be careful putting that machine next door to my plane. These really are the only guys who are getting over all of these hurdles. And what will happen, I believe, is that when they do announce the first hub, they've sort of already announced the first hub because it's the UK, that is a hub. But they've been very clear they have this hub strategy. But when they do announce that first hub and the first people to use it in anger, then it'll be like dominoes. Everyone will suddenly go, oh, we got to have it too. So unfortunately, timing is it's very difficult to put a time on it. When it happens, it'd be like coming off a waterfall, but going upwards. So that's, I think, the sort of position they're in. That they were, I think the other point that comes across, people do get it. They've got a very strong balance sheet. We raised them about 14-15 million pounds back last August/September. So they're in a very healthy position. It's sort of just sitting there waiting for what could cause the stock to absolutely fly. I can't give you timing on it, but when it happens, you probably won't have time to catch it. It'll be like the opposite of catching a falling knife, whatever that is, catching a helium balloon or something. Is there a phrase for that? I'm not sure. Anyway, that's my take on it. Sorry, what else were you saying about it, Phil? You're the analyst.
Yeah, I'm the analyst. No, it was that quite, that struck me. It was the cash utilised, Andrew. The cash utilised and the return that they're getting on it in terms of how the company is progressing and scaling out. As I say, scaling out internationally. It's astonishing, and in the right, as you were pointing out, the States valued at X, and it would have Y amount of capital coming into it of a large scale. Companies like this, we should be supporting in the UK, very much so.
Yeah, we should. Anyway,
right.
We talk about the company a lot. They are doing a roadshow. I'm sure we'll be talking about them a lot in the future as well. So that's probably enough on that. They're off a tiny fraction today, 72.5p. But as I say, suddenly one day you'll wake up, it'll be a very different price.
Right.
Right. Let's move to Invinity Energy Systems.
Yes. So again, client of ours. The share price now is 38p, valued at 206 million pounds. I think when I last looked, the shares are up 90%.
Right. Yeah.
Yep, so this is for low battery technology. They had their full year results. I mean, to be honest, it's more about looking forward for the company right now. But just looking to those results, their revenues rose from £5 million to £17.8 million. And within that, they'd shipped 25 megawatt hours of flow batteries, up from 7.3 megawatts in the prior year. So that's really, really important because they're getting the batteries out there with clients looking at them. They also completed their Copwood facility. It's a wholly built battery facility in the UK, 20.7 megawatts. So that was completed. And again, this will be used to demonstrate to customers the potential returns from flow batteries on the grid. So that's really, really important. They invested in manufacturing capabilities to scale ahead. And why are they looking to do that? Well, clearly, post-period, they announced the win in Switzerland with FlexBase. This is the AI data center battery that Andrew and I have talked about previously. It's 1.5 gigawatt hours. So, just compare that with just under 25 megawatt hours that they shipped in 2025. So, a huge project. So, they're scaling up the business. And also, we're very much looking forward to the results of the awards under the LODES, the Capital Floor Scheme in the UK, where they've got their battery technology submitted on 21 projects by 4 developers. So waiting to see at the end of June what comes of that. But I mean, it's a potential risk-weighted pipeline for them of over £200 million in 28. So, some big opportunities ahead for Invinity.
I mean, shareholders have been exceptionally patient here, obviously. We have backed them now for 10 years, raised them over £200 million, I think. And so it's about time we got a good reward. But I think the one other thing that's interesting is that, when you look at how companies perform or share prices perform, sometimes you can have the best business, the best management, but if the tide is against them, you go nowhere. And obviously the tide has sort of been against vanadium flow batteries, and it was all with lithium batteries. What is interesting now is the tide has definitely turned, and I think they're catching the wave slightly, because in China they're rolling out vanadium flow everywhere. India is now saying we want vanadium flow. America is definitely rolling out flow, not always vanadium flow. There's quite a lot of iron flow, zinc flow.
Yeah.
But the way that the tide is now in their direction. So if you've got a good product, and they have probably in the modular vanadium flow battery world got the best product worldwide. If you've got a good product and a good management team, and you're running with the tide, you can go an awful long way. Now, as you say, the stock has picked up very nicely. Actually, year to date now, it's actually doubled, which is a great run. And in fact, since the results, they've moved up. Since we started talking, they've gone from 38p to 38.75p. Every little helps, says Tesco. But why is it nudging up like this? Probably, as you mentioned, we've got some UK government orders coming up at the end of June, which again could be massive. Now, if they get a massive order from that, it absolutely validates the whole thing. And as you say, they've got Copwood. People can come in, see the data set, see the data, which is what's so important. And it changes the dynamics, really, of what a company like that, this is worth. When you say, look, actually, the industry is going this way. They're a market leader. Their product works. You're going to get a completely different set of people looking at it. And this comes down how the UK is so undervalued at times. If this company now was in America, it would probably be worth double this, because the Americans go, well, hang on a second, guys. That's a terrible American accent. But it would be. And I think that is what is probably getting the price to go up. It's new people. It's possibly not even people in the UK buying this stock, because they're saying, actually, this in America would be worth an awful lot more. There are a couple of. Do you have any more individually you want to speak on Invinity, Phil?
What's on Invinity? No, that's fine.
Because what's interesting also, we've just talked about two of our corporate clients there.
Yeah,
they actually have a lot in a lot of things in common. One, of course, is a shareholder, which is Atri/NextGen, which is we brought them into both companies as shareholders, and they have a big position in both, which is interesting in its own right. The National Wealth Fund did go into Invinity Energy Systems. They didn't go into Aurrigo. Actually, they went into a rival, didn't they?
Yeah, they did.
Surprising to me. In many ways, they should have
gone to Aurrigo. Yeah, that's in software.
Don't need their cash. That's one of the problems.
Yeah, that's true.
But they're both companies that have probably technology that is world class. Both companies which, if they were listed in the States, would probably be worth almost 10 times what they are in the UK. There's a lot of similarities between the two when it comes to investing. Great British companies. Aurrigo, obviously, its headquarters in Coventry. Invinity up in Motherwell and Bathgate in Scotland. This is where we should be seeing, Rachel Reeves is saying buy British. Well, it's a very easy thing to say, buy British. Anyone can say that. I can say, look, buy British. But actually, what you should be saying is, let's get people investing into British, and let's give them a tax break for doing that. I know it's a tax break, and they like to tax everything, tax the fresh air you're breathing probably next. But that's how you get UK economy is moving and UK stock prices are moving. Anyway, there you go. Before I go on to a massive political rant, which I've tried to avoid today, two really interesting companies,
Yep.
two great British companies, two undervalued companies if you look further down into the future.
Yeah, there we go. I mean, I just keeping with the theme, ITM Power is another one that's been listed for a long time. Electrolyzers for hydrogen, definitely undervalued, but now is having its day in the sun, as they say. And they, I was just looking at their share price over the last 5 years, and the run on that, it's valued at 1.3 billion now, ITM, and they've, yeah, sorry, Andrew.
No, it's up 180% year to date. ITM is.
Yeah, yeah. And I mean, they had a little announcement this week, which is it was with Protium Green Solutions. This is for hydrogen. So they've got a strategic partnership with them, and this is to invest in industrial scale green hydrogen production plants across the UK. And they've got an initial project in Cromarty in Scotland. And recently, I think Protium secured government hydrogen allocation money, which has been long awaited, but just an interesting little development from there. And I think there's been a lot of momentum behind ITM over the last couple of years. And you and I have been talking a lot, Andrew, about potential powering of data centers, particularly with fuel cell technology. So that's quite interesting there for their electrolyzer technology, which clearly produces hydrogen.
Yeah, I mean, Invinity, ITM, Ceres, what was AFC, now H Power, they all tend to
Yeah.
move a little bit as a group. But Ceres actually is up 270% year to date. Actually, dare I say it, the underperformer of them all is H Power, that is only up 50%. As we've said on this podcast many times, though, we just want to speak with the CEO to find out what's going on. I wish he'd give us a call. I couldn't resist putting that in, Phil.
I thought you might. There you go.
Oh, dear, you got to have a laugh sometimes. Right. We obviously chatted for quite a while, but have you got any other really important other pieces of news or results?
Well, it's been a bit thin, but Chemring, defence
good.
Yeah. They 1.4 billion market cap. Their shares are just up 4.8% year to date. But this is an important company. This is defence technology. Aerospace, defence, and the security markets are what they end customers. They reported interims to April with a revenue up by 6.5% to £237 million. And this was driven by quite strong performance in countermeasures and energetics. And energetics are munitions. So they and countermeasures obviously against incoming threats. So the profits up by 7.5% on that 6.5% revenue increase. But they said that they've been investing in their energetics capacity, building explosives, propellants, etc. But also that they saw quite a bit of business in terms of space vehicles for launching. So I didn't know, energetics are used to trigger launching as well. So they, particularly if this is a defence company, so their order books closed at 1.4 billion, and the energetics business was 917 million of that, with order intake up by 54 million pounds. So generally looks to be going well for Chemring. I was just looking at the valuation. It's a PE 25 times for October 26 year ending, falling to 20 times next year on forecast 26% EPS growth. And that's from Icon. So, yeah, quite reasonable.
I mean, again, it's another really good British company. I'm trying to think back because they obviously had that bid approach, didn't they?
Yes, they did. Yeah.
What was that, about 18 months ago or something?
Yep. Yeah. Yes, it was over well over a year ago.
Unfortunately, in my old age, my memory is going slightly. And I think when it was getting a bid approach, it was trading up around £6. It's now about £5. So it is a little bit below that. But, performing like this, you could easily argue that was the right thing to do, to turn it down. But I think I've got my memory right. But if I haven't, by the way, forgive me, please, everybody.
Yeah. So, yep, that was it, really, I think, in terms of trading and announcements, Andrew.
Yeah, no, look, I didn't see. There's a few itsy bitsy things around, but I didn't see a lot
Yeah.
else either. So I don't think you missed too much. So look, I hope everybody found that quite interesting. If you want to know obviously more about Aurrigo or Invinity Energy System as corporate clients of ours, do drop us a line in any form you want, and we'll try and. If you need a meeting with the company or something, or want to get into a group call, or you've just got specific questions, let us know, and we'll be back next week. So thanks.
Chat next week, Andrew.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.